Okay, welcome to the channel. Today we're going to talk about a few items that assist in long-term investors. We're going to talk about the CPI report that came out last week. We're going to talk about the attack from Iran on Israel and how that may affect the markets. And we're also going to talk about a new stock that we're looking at in United Parcel Service, UPS. Before we get into the first information of the day, we would just like to remind you on this channel, we try to concentrate on long-term investments. And what we mean by long-term investments, we purchase long-term companies in the public sector, basically in the stock market, that we plan on holding forever. We believe that the two most important parts that you can do when making long-term investments is to make sure that the company has a long-term economic outlook where you can say, I believe in 50 years, this company is still more than likely going to be here. The second thing, and probably well, not most important, but just as important, is the price that you pay. If the price that you pay is too high, you eventually probably make money, but if the price that you pay, it may just take you a little bit longer. We look at purchasing public companies the same way that we purchase private business. We assess their balance sheet, we assess their income statement, and we look at their cash flows. Because basically, a business is only as good as how much cash that they're going to put off. So we look at the same thing when it comes to a public company. We like to purchase the company when we will really want to purchase the whole company as a whole to make sure that we're getting good value for our money. Obviously, you wouldn't purchase $1 trillion company if it's only making $1 million. I mean, but if you purchase in a $1 trillion company that's making $20 billion a year, you can see your return. That's how you would look at a private company. That's how you would look at a house. If you was purchasing a house to rent, well, how much can I rent that house for right now? How much cash flow can I get? And is the value of this house that I'm purchasing going to go up in the future that allow me the opportunity to sell it? That's the way that you should be purchasing companies. And what we're doing today, because the stock market is so high, we're mainly focusing on T-bills. 90-day T-bills, we're getting them at around 5.37%. That's one of the best values that we see right now. We don't know if the Fed is going to raise interest rates, so we're happy with that. But the 2-year, as of today, been kind of creeping back up. If we can get that and lock that in to a really good a good yield, that's probably be something that we will look at. But as of right now, we're buying T-bills and our long-term investments. When we talk about long-term investments, the companies that we like, that we own, that we have no plans on selling, of course, unless something changes in the economics of the company, we'd be lifetime holders of these companies. And some of our favorite companies right now is BlackRock, Meta, Google, Amazon, Berkshire Hathaway. These are companies that we believe in the long term value. We believe they're going to keep increasing in value over time because the stock market is so high right now. If they may fall, and actually we'd be happy if they fall, because if they fall, they give us the opportunity to purchase them at a better price. I mean, what would you prefer? What would be better than purchasing a company that you already love, that the price fell down to a price that you kind of like? So the first thing that we're going to talk about today is the news from last week about the CPI report. The CPI report came in at 3.5%. I would like to remind you, the market did fall last week based on this news, we believe, and we believe that you use this data as long-term investors just to kind of have an idea of what's going on in the landscape and hope something significant comes along to allow you to, one, either purchase more shares, or two, sell calls on some of the long-term positions that you hold while not trying to lose those positions, which is something that we'll get into at a later date that we kind of use in our teaching videos. But with this 3.5% as long-term investors, what we look at, we have to ask ourselves, based on a 3.5% increase in inflation from the CPI report, is the Fed more likely to raise rates, more likely to keep rates the same, or more likely to lower rates? I mean, we believe, as a lot of people, that the Fed is more than likely going to stay the course. They already raised interest rates. They're going to see what happens in the market to make a decision. We believe that the Fed should actually raise interest rates right now Inflation have went down. And obviously, y'all know inflation was very high a couple years ago. The Fed has got inflation down, but their mandate is to get inflation down to 2%, and they're not making there yet. The inflation was a little bit lower the last 2 months. Inflation started to rise, and we believe the Fed should do something about that to get that down to their 2%. Now, the market tends to think something totally different. They tend to think that we're still going to possibly get up to 3 interest rates um, cuts this year. We don't believe that's going to happen. So that you understand, the Fed lower and raising interest rates normally affects the bond market, and we look at the bond market as mainly the gravity of of the stock market. If the Fed raise interest rates, that'll give you a higher yield, which if you're buying government bonds, which they call the risk-free rate, which is a whole nother conversation, but it's the risk-free rate. It's where you can put money in and you're pretty much guaranteed because they're backed by the United States government. You're back. You get your money. You get your money back. So as with our T-bills that we're buying 90 days out, we're getting 5.37%. So every 3 months we can count on the federal, we can count on the government giving us our money for our bonds. So that's what we're doing right now. We believe that that's the most prudent investment that we can make. We think there's more risk in the market, downside risk to the market going down and not going up, which is why we're buying T-bills. But back to that CPI report. And so the market did fall last week. We're hoping for a much significant decline before we would start either adding to our positions or adding to any new positions that we see or we like out there. So we believe is the importance of the CPI report. It's not something that we would trade on. We're not traders. That ain't something that we do. We don't believe that you can really make money in that way. There is some people out there that make money doing that. Good to them, but it's something that doesn't work for us. It's something that's not in our wheelhouse or we believe that we can be successful at. So the second thing that we're going to talk about today is as you know, Iran shot missiles off into Israel. Luckily, for the stock market, luckily for Israel, they didn't really land anything. I believe they hit 99% thanks to America and some other countries helping them shoot down the missiles and drones that was shot at them. And we think if we would have woke up today with Iran landing, over 300 missiles, really doing damage to Israel, I think something totally different will be going on in the stock market. I think there could be a lot more fear in the stock market. But as I said, the market was down last week. The last time we looked today, the market was actually up. So that was good news for Israel, and that's good news for investors that want the stock market to go up. So that was good for them. So the third and last thing that we're going to talk about today is we're going to talk about a new investment that we're looking at. We're looking at UPS. UPS, as you can see on the sheet here, the stock, the 52-week high is on 197.80. The 52-week low is 133.68. This actual stock, I believe, today is at around 144. As I said, this is something that we're looking at, and we're going to go into some detail of why we're looking at it as far as the numbers. But we believe that UPS is a rock solid company. About 6 months ago, they did a deal with the Teamsters. They increased their wages on their employees significantly, which of course will affect the bottom line, which we believe is a lot of the reason that the company is down. It's going to take them time to maneuver around that increase in wages. We know they're going to do things like automate their warehouses more, and that's probably going to decrease, in payroll within the company, which should help the stock. And we believe that if we do get some type of recession, which I believe that we're going to need to slow down this inflation, we believe that packages will shrink a lot. I mean, package delivery will go down, and that probably take UPS down even more. Now, looking at the numbers of what we really like, one of the things that stand out to us the most is that you can see that they have a dividend yield at around 144 or 4.50%. So in doing some simple math, if we can get it down to 120, 125, somewhere around there, we will be getting over a 5% dividend yield, which we think is a really rock solid company. I think their high all-time highs around 240. We believe that one day, we don't know when or what's going to push it up there, but we believe UPS will be at an all-time high again. Because we believe that UPS is an outstanding company. You can also see their return on equity is 36.17%, which is a nice return for a company of this size. You can also see that their price to earnings right now is 7.79%. I mean 7.79, and and that's actually coming down some because, as we told you, they increased their wages so much that it's kind of hurting their profitability. But we think in the year 2025, if we don't get a major recession, we believe that they'll be able to start increasing their profits over again. So again, that's the things that we wanted to talk to you about today. Again, if you like this information, if you thought this information was useful, please hit the subscribe button so you can get more information, and also hit like. That'll really help the page to pass information out to more people. Thank you very much for listening, and I really do hope that this was beneficial.